Hello, everyone. Sam here from creativetrading.system.com, making this video about EUR-USD. Very interesting things happening in there. So, and we can have some really, really good trades coming days. So let's take a look into that, right? The first thing that I want to show you that a couple of things. First, let's see this pattern called Gartley, the harmonic pattern, right? And you have variation, bullish, and all of that. But what are they, and what is the calculation for that, for example? So basic plain Gartley pattern, it calls for like 5 points, right? And four legs, one, two, three, four, 5 points, X, A, B, C, D, and a specific calculation, right? So if you have a move like from X to A, then the B must be at 61%, not less, not more. I mean, a little bit less, more fine, but not at like 50%, and not touching 61% or touching 78. All right. So it must touch 61%, but must not touch 78. That's what it is. It's in between there somewhere, right? So the B point, and then you can have a Gartley pattern. Why? Because it's going to drop here for point C around 23%, and then it will go to 78. And this is where a Gartley pattern will be finished and completed. And then you can expect that it will drop. But me, I know how they are built and how they're, calculated and created. So I start usually taking step by step. I short here and then go take it to the 23% line. If it's making a turn from here, now I know that where the heck is going, and then I trade all of that, and then I trade all this. So every step of the way, I'm trading these patterns. These patterns are nothing but the Elliott wave, and Elliott wave is nothing but the Fibonacci mumbo jumbo. So once you understand the Fibonacci, you understand everything. Bottom line is that this is what the Gartley is. You know that now, right? The other thing that I want to show you that if you look into the Elliott wave perspective, what the heck happened, where this Gartley shows up. In fact, I'm going to show you here. It is probably is going to be somewhere here, not here, and maybe here. Yeah. Okay. So look at this diagram, right? So this one is showing that how Elliott wave made these patterns and where. So if the Elliott wave count is like 1, 2, 3, 4, 5, then correction A, B, C. Now these are the locations where you find these harmonic patterns like Gartley, bat, butterfly, right? And you must know that, if you find here a bullish Gartley, then you're not supposed to take it. It's only bearish one will do a good job, right? A butterfly. Here it is like a bearish Gartley will find, but if you see a bullish one, don't take it. So once you know, now here you can take the bullish Gartley or bat, and here you can take a bullish butterfly or crab pattern, right? And so these are the locations 1, 2, 3, 4, 5, A, B, C. Here, 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 this pattern happens, right? So right now, this is what Elliott wave, including or alongside with the harmonic patterns, right? So far, so good. Now let's go take a look at a chart that I made long time ago. I made it on September 2024. This is a EUR-USD weekly chart. Now you see that this is, I have here, I said this one or A, and then two or B is going to be here. And in between, what the heck is happening is that this is like small one or A, Elliott wave count. Then this two or B is going to be here. It's like A, B, C, this white count, three waves. And then even this B has three waves, A, B, C. This is what happened, internal structure of the corrective waves, right? So this is what I said that is gonna, if USD gets strong, then we're gonna go down here to 61% of this move. That would be a wave two or B. Then we will go up for wave three, sorry, two or B, this is black count. One or A, two or B. And this blue count would be three or C. Three can be even higher, right? But this is a very, very strong number as well. Why? Because if you look at the Gartley pattern I just showed you, that's what the calculation is. 61, 23, 78. Now watch. Uh, this touch is 61. Then I said it's going to come down to 23. And then I said it's going to bounce from here and go to 78. And that would be a Gartley pattern. It's not mentioned here. I didn't want to, make the chart messy. But I'm looking at both studies, Elliott wave count, wave one or two or A or B, whatever, and then followed by C to the downside or three to the downside. Or the Gartley pattern will be finished here as well at the same time, and it will go down from here. It's supposed to go down. It's going to go down or not, I don't know, but supposed to be, right? So at least I got this one right, because as of yesterday, we touch this like this. So you see, I said we're going to come down from here to here. So we did, and exactly from the same place that I said that is going to bounce, and we bounce from there. And yesterday, Friday, we touch this 78% finally after 9.5 months, right? So this is what I always say, that market is not random. A lot of people said that, it's just moves so randomly and nobody knows what the heck is happening and where it is going, right? So that's not the case. The case is that you just need to learn. Simple as that. Market is very arithmetic, and it has the calculation. It follows the Elliott wave. Basically, I would say not Elliott wave or harmonic pattern. It follows the Fibonacci, right? Because we measure Elliott wave and harmonic with this only tool that we have here to measure these things, or any market at all, financial market, is Fibonacci 2. That's it, right? Just like we measure length in feet, and then weight in pound or kilograms, right? Or volume in liter or gallon. We measure these waves in Elliott Fibonacci: extension, expansion, and retracement, right? So this is how it is. Now you see that we have completed wave 2, or it could be B, according to Elliott wave, as well as we've completed today by the book, perfect touch of a Gartley pattern, bearish Gartley. This is a bearish Gartley, and it's supposed to be going down. Okay, I'll make new charts later on. Today is Saturday, so by Sunday probably I'm going to make the new Elliott wave count, new harmonic pattern, the Gartley, how it's going to play out, this and that, and then I will make a video, and then that would will be for my subscribers, right? So if you want my analysis and all of that, just go on my website here, creativetradingsystem.com, and subscribe. And this is only EUR-USD I'm showing you. Let me show you that how US dollar index is doing, right? For example, excuse me, this US dollar weekly chart I made in January 2025, saying that the price has gone to 78%. So it's supposed to be going down from there, right? This is like A, and then this is A, B, and C, 78%. Now it's supposed to come down. So I made the monthly chart as well, but I kind of lost it somewhere. I don't know. I can't find it. But yeah, the idea was down to the downside, to the TL and all of that. So let me show you. Later on, I made that chart, and I made it like this. So you see, this was a 78% here, and it's supposed to be dropping. So it was here when I again made the chart in February, and the final target was this outer TL with this dot here, the yellow, and then 61%. This is 0390, right? So this is what I said, that US dollar index is going to be coming down here, and that would be the slight fib and 61%. There's a lot of wobbling here, so it's no harmonic pattern or Elliott wave count proper. But Fibonacci is still at work. From this, it went to 78%, and then from there, for this fib, coming down for 61%, right? What happened yesterday, this chart turned out to be like this, okay? On the 28th, I made the chart. Today is 28th. So Friday, we came finally, and we hit this exact touch that where I said that it's going to come down. I even made a daily chart showing that it's a little bit detailed. For example, here, I made this chart that we're going to be coming down to 61%, 0390, and this pull is 127. So we finally came in, we touched that line, right? So both are, and then they go opposite, right? EUR-USD and US dollar index. So US dollar index dropping means it's getting weaker, and EUR-USD is going up. So both are at their respective stations, right? This one is at 61% to the downside. If it's bounce, it's going to get strong, and Euro USD, boom, it's going to drop because it is completing wave 2 or B or a Gartley pattern, and Gartley pattern perfectly by the book Gartley pattern. There we have, where the heck is that? Right here, it's completed. It's a Gartley pattern, by the way, right? And it's going to drop. I made the chart that says Gartley pattern. Where the heck did that go? Why I'm opening this one. But anyway, so let me see. Let me go on the Euro USD live chart. Yeah, so okay, yeah, I didn't record this one. I'm going to record it. So it's Gartley completed at 78%. Perfect calculation by the book, and over 9 months and a weekly chart. See, this is how perfectly calculated this market is. And all the other pairs are doing just like that, just same thing, but we just can't find it. And if we are lucky, we find it, right? That's how it is. You just have to work hard to find it, and exact location, exact patterns or Elliott wave, and then use the Fibonacci is the key. Now, the final touch here, what happened? Let me show you. It's amazing how I ended this move to the upside. Finally, I made final chart was like this one on a smaller time frame on my 40-minute chart. See, that chart is not for entries. That chart is for the direction that what the heck is happening and which direction should I trade and where the price is really going. So according to that, I made this 40-minute chart and these swings, small swings up and down and up and down, and then I trade them with my even smaller time frame entry time frame, like 20-minute chart and 7-minute chart. You see all those trades, right? I made the video yesterday. Just look at it. 28 trades. Beautiful, beautiful trades just based on these mumbo jumbo, right? So 1, 2, 3, 4, 5, that would be ending this wave 5 and ending the big C78%, 1747. That was mentioned here 9.5 months ago, 1747. This was the target, final target, after dropping here and then going there. So this chart I made finally that this is the end of the, this whole thing probably, and we're going to go up there and touch this, and look what happened to this chart. And it went and touched that thing perfectly in a straight line. Boom. 1747 touch. This is a weekly, 78% here. And now what? All right, so I'm going to make new charts, and then I'm going to give you my subscribers. So if you want my charts, my analysis, and all of that, just go on my website, be a part of this game, part of my group, sign up, right? And then you will get these weekly charts and 40-minute charts. 40-minute charts I usually put on my post on my Telegram for my subscribers, especially, right, so that they can take the trades. And I teach them and explain them, all this, so that how to take the entries from the 7-minute chart or 20-minute chart as it is written here. So once we have a reversal candle on a 40-minute chart, by the way, the last video I made, I literally showed there that how the pound USD was turning and have made the reversal candle, and then how I was waiting for 7-minute entry, and then I found one and then I took it. So I copy that, and then I have this, the whole thing there. Let me quickly see if I can show you right here. It should be on my desktop still. If I can find it, I will show you. I just made it yesterday, man. I know I didn't remove. Oh, here. So look at this chart, the 40-minute chart of the heck. Okay, pound USD, right? So this is a 40-minute chart. I cut the snip from there and then posted on this chart. That this is the entry, and that happened because of this dropping. This pound USD 40-minute chart, it is dropping from there. So I made this chart before, like on the 26th, I guess, right? It was there. So I said it's probably gonna go somewhere here. It's gonna make the turn. So it started to make the turn. Couple of red candles, and this was happening. And then it went up, gave me the entry. My expert advisor, Robert, it took the entry, and then it went down. Thanks to Trump, that got messed up. Or late Friday when he posted the news about the Canada. But yeah, but this is how I usually get all my trades. You will see, on my website, all 28 trades last week, and they are all like according to this setup. Nothing is without the setup. Nothing. No random trades. No. Because the thing is that this EA will not open a trade unless it has the setup and all four conditions with it. That's the only way. So when I see the setup on a 40-minute chart, I put this EA there, a long only and short only, because I don't want to go long here, right? For some reason, if I have a long setup, I don't want it. I don't want to go long all this high, right? The only thing I want to go is short. So I make it short only, and then it when it start dropping, even if it gives me a long setup somewhere here, it's not gonna open that. And only the short one, it opened, and then 30 pip already here, right? But the daily range, it goes for the daily range, right? The first entry you get every day, early in the day, and then it will go for daily range. Daily range for this pair is 106, so it's gonna start dropping here and then go for 100 pip, right? This is how it works. So anyway, but that's what I was showing, that this is how beautifully Euro USD gone up and touched the target finally at 78%. Gartley pattern is completed, and I'll make the new charts and give it to my subscribers. If you like the video, please, press the like button and subscribe the YouTube channel so you can get my videos on time. And if you want to be a part of it, you want the system, you want to trade just like, we are trading here, right? Then go on my website and subscribe. All right. So this is it for now. Thanks for watching and have a wonderful rest of the weekend.